So that took you what, '08 to 11, and then
Yep.
you started Carolina's Dentist.
Mm-hmm.
So apparently that was about an 8-year run because you mentioned you had sold that in 2019.
Yep.
Give us just the highlight of that. Who did you sell to? What did the deal look like? Were you selling to a third party? Was it a strategic acquirer or a financial acquirer? What's just sort of the high level overview of that exit that you had in 2019?
Well, first, and we'll get to it, I guess, probably like why was I exiting? What was my commitment inside of
Yeah,
that? And I
yeah,
knew that I was not, I knew that what I needed was geographic flexibility, and
okay,
I didn't want to be related to that business anymore. That was just like the decision that I had made. Now, in hindsight, maybe I would do things different. But that was my decision. So we were open to a strategic buyer
okay,
or or a PE exit in that. We also took some interest from family offices, but in truth, most of the family offices, because of what they're looking for, wanted me to stick around, and that wasn't an option for me.
mm,
So if you think about what we needed, I had some business partners in the business, but I had been the CEO
yeah,
of the business up until that point. And so what we really needed is we needed someone that had the resources to be able to, everybody else was sticking around but me. And so
cool,
we needed someone that had the resources to provide for the future of the business to go in the correct direction.
yes,
We wanted a good future partner. This wasn't about like
mm,
drop the mic and whatever else.
sure,
And so that's why and honestly, like there weren't a lot of strategics that we could find that were similar
yeah,
the other that made also a lot of the investments we had made didn't have value to some of the strategics. So like, no, we don't care about
yeah,
these things. We don't care about team. Well, you don't care about this other stuff, you
yeah,
know? And so what ended up happening, believe it or not, was that it was sort of a combined situation. It was a PE firm that had that had an existing dental company in their portfolio that had a very different strategy than ours. They were 100% acquisition based, where we had been 100% new location based. And
mm,
so what it looked more like in some senses were some mergers of operational skills and
okay,
capacities. They're like they valued what we had built and
I
what we
see.
had because they didn't have it in the existing side of their portfolio, but the two companies blended
Mm,
together really nicely. So that's where we ended up.
nice. Two, two, two things as a quick follow up. Give us a sense of size and scale. How many locations were you at that point when you were acquired? How many employees in the operation?
We were just short of about 300 employees.
Wonderful.
We had large multi-doctor, like typically 3 to 4 doctors per location was the way that we
Yes.
operated. So it was a unique model. We had a bunch under development. I don't remember whether we were seven,
Yeah.
eight, or
Totally okay.
nine locations at the time, but they were large locations, and yeah,
Cool.
yeah, that's what I recall. 3.5 to 4 million, I think, in EBITDA at the time, something like that.
Cool. Awesome. Thank you. I appreciate
Hmm.
that. I want to just go back and break down a couple of terms that you talked about because I think they are really important for some folks who might be earlier on their journey thinking about how they're going to build towards an exit. You talked about strategics, you talked about private equity, you talked about family offices.
Yeah.
And so when we're talking about third party acquisitions, I always say to people there's only 8 ways to sell a company: four internal and four external. So obviously when we begin to think about external sales to third parties, they tend to break down into financial acquirers
Hmm.
and strategic acquirers. Um, Obviously, strategic acquirers are valuing the company for more than just a multiple of their annual cash flow. So when you were talking about strategic acquirers, just to help maybe some of the listeners understand that a little bit, who would those strategic acquirers have been, and why would they have potentially wanted to buy you for more than your cash flows in your
Yeah.
particular industry?
Yeah, so strategic acquirers were existing dental groups.
Okay, great.
And what made them strategic is they already have a go-to-market approach. They
Right.
already have an infrastructure, systems, HR, all the things in place doing this exact business model.
Yep.
And what they're doing is that, I mean, they are still doing a financial aggregation. So they're going to buy us
Yep.
at a multiple, but the aggregate multiple that they
Yeah.
now have by having us in their portfolio, say they're buying us at a 8.5 multiple on EBITDA, but by acquiring us into their portfolio, they're probably valuing it at 12.
Yeah,
So
which is what we call EBITDA arbitrage in
even the
technical M&A
arbitrage. So they
world.
bought us at 8.5, and we're automatically worth 12 because we're a part of their bigger company now. So
Yeah.
so there's no reason for them not to do it. And you know it should this is their job. They should be really good at it. It should be really straightforward
Yes.
and simple.
Yeah.
But in comparison, like sometimes when we're looking at financial, um, a financially backed, so just a private equity group, this might be their first step into the dental industry. They want to be in
Yes.
dental. They're super excited. And right now, like there's hundreds of these PE groups that are sitting there saying that. They're like, I'd love to be in dental healthcare. It's great. Let's go. Um, but they have a lot of knowledge and a lot of experience in, oh, we did dermatology, we did orthopedic, we did this, we did that. This is our first step into dental. So they don't have a specific dental architecture or anything like that. We would then be the baseline that they would build around as they build a broader, if I theoretically, as they then become the backers of a
Yes.
strategic inside the dental industry.
Wonderful. I love it. I love it. So we talked a little bit about strategic private equity as its own animal. Family offices tend to be, for those unfamiliar with that term, would tend to be offices of affluent or high net worth families. Sometimes they may have their own manager that they hire. There's certainly a growing trend in fractional family offices where wealth advisors or financial advisors have built out entire teams now, and they're taking that capital and deploying it in places other than traditional stocks and bonds, right? But there tends to be a strong focus on preservation of capital.
And where strategics and PE groups are usually on a 3 to 5 year timetable,
Yep.
family offices are typically, not always, but they're typically or often on very long-term timetables. They're looking for just solid, stable dividends. And sometimes they don't even have a plan to exit. They'll be content to retain for 20 some years.
And Eric, since you sold to private equity, that was your exit out because you talked
Yep.
about some things that made this group a little bit unique in the private equity space. Just from a deal structure point of view, one of the things that we see future sellers commonly misunderstand is how they get paid, right? There's a taxation issue, there's earnouts, there's rollovers. Again, just at a super high level, did you have deferred payments in your deal structure, whether those were performance-based payments like earnouts or whether that was the private equity group asking you to roll money over into their fund?
So their preference would have been that I had an earnout in there. They offered, I did not want an earnout because I was trying to sever my relationship
Yeah.
emotionally with the business. That was a choice. I think I walked away from money inside of that, but in light of what I know afterwards, I'm really glad that I did. Just because I know my personality and I would have been very vested in what was going
Yeah.
on and I wouldn't have been able to separate. I did have, there were some escrowed funds.
Okay.
So as a portion of, I mean, with anything, it's really when a private equity buyers are not dumb and they're going to make sure that there's no surprises that come up or no surprise debts or something like that that they didn't
Yes.
account for. And so roughly
Yes.
$1 million of my proceeds were held in escrow after everything was complete.
For how
And
long?
for I believe that it was a half was distributed at a year, and then the remainder at 2 years. So for two
Yeah.
years there was, or maybe I don't know, something like that. Up to 2 years post, there was some money that was retained. Yeah,
So it may not have been an earnout, but you did have a deferred payment where they were setting money aside in escrow for
that's
reps
right.
and warranties or to make sure the business was going to
Reps
perform
and
or
Rep
something
was
like
all
that.
reps and warranties
Yeah.
type stuff.